Come on in, sit back and relax. You are listening to episode 232 of the WealthTech Today podcast. I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. And this podcast features news, information, and analysis all around the best practices for wealth management technology. And this is our March news roundup, where I read the news, give you my take on what's happening in wealth management technology. This episode, I have a special guest later on a couple of these clips. It is David Rosine, who's got 30 plus years of experience, is one of our senior consultants, been around the industry for quite some time. And he's going to help me. We're going to bounce around some ideas and talk about some of the news. But before we begin, let's talk about tech stacks. Now, at Ezra Group, we've seen tech stacks of hundreds of RIAs. And let me tell you, most of them are loaded down with tech debt. So you shouldn't feel too bad about yours. But let's face it, tech debt is like a giant anchor holding back your business growth. If you want to free your firm for exponential growth, you should run, not walk, to our website, ezragroup.com, and fill out the Contact Us form. Our experienced team can evaluate your current tech ecosystem, deliver targeted recommendations, optimize your existing systems and operations, or run an RFP and help you implement new software to take your firm to the next level. You can take advantage of our free consultation offer by going to ezragroup.com. A few quick housekeeping items that we always do before the interview. Please subscribe to the show wherever you listen to podcasts so you don't miss an episode. Check out investinothers.org. That's the Invest in Others Charitable Foundation. They do a lot of good work in our industry, raising money to donate to charities that are either run by or helped by financial advisors. Okay, first up in our news episode is the Orion Ascent Conference. I just came back from San Diego, sunny and warm San Diego for the Orion Ascent 24 conference. It was the biggest, and I thought the best Orion conference yet. I've been to quite a few of them. Again, it's of course it's a bigger conference, partly because it's an Orion / Redtail conference. So you've got those two firms which merged. All of their clients now coming into this one conference. So great to have see everyone there. Really a huge conference space at the hotel there in San Diego, and the exhibitor space was jam-packed. Way more exhibitors than I'd ever seen before at an Orion conference. Certainly a lot to choose from, a lot to learn, a lot of people to talk to. All together a great place to be last week. Before we start, let me give a shout out to MC for the experience, the MC of the conference, Rick Williamson, Director of Brand Experience at Orion. Now, he's formerly known as Ricky Redtail, and now known as AKA Richard Orion. And he did a fantastic job as the conference host. He was on stage a lot, moving the programs along, also interviewing Orion executives, which is not an easy job to do, like Brian McLaughlin and Natalie Wilson. So again, shout out to my friend Rick. You did a great job. One of the main focuses that I found at the conference, one of the underlying themes, was behavioral finance. This is something that Orion has really latched onto, and I think it's great. It's good to have something like that, especially when we all give lip service to holistic financial planning, holistic wealth management. Bringing in behavioral finance really supports holistic wealth management, and the way Orion is positioning it as sort of the glue that's holding together and integrating and moving through all of the different applications is great to see, and I think a great move on their part. Number one, it's the right thing to do. Number two, it's a differentiation from some of their competitors. Now, their suite of services and products, all working with behavioral finance, was apparent during the conference through the different breakout sessions that I went to. Everyone is mentioning it, everyone's talking about it. And of course, it's being driven by their chief behavioral officer, Dr. Daniel Crosby, whose book you should check out if you get the chance. And some of the capabilities I saw, whether it's in their client portal, in risk assessment, in financial planning, I think are going to be really helpful for advisors to help build tighter relationships with their clients. So behavioral finance, or BFI as they're calling it, was the unifying theme of the conference. Orion also announced a WealthTech survey, And some of the stats include 50%, 57% of advisors are currently focused on generational wealth transfer as a growth opportunity, with another 36%. So what is that? 57 plus 36. That's 90% of advisors altogether will be doing so over the next 3 years, which of course makes sense. We heard from new CEO Natalie Wolfson at the conference. She made a strong case for BFI being the driver of all aspects of wealth management, and her keynote was almost entirely focused on technology and didn't really mention Orion's TAMP capabilities, which was surprising, or maybe not surprising, considering where she came from. She came from AssetMark, where she was previously CEO. Orion has made a big move into the TAMP space, as many people will postulate, in order to compete better with Envestnet. And also the exhibit hall was seemingly overflowing with asset management partners, which I heard they made a big push to bring more of them on for this conference. Some new software products and new feature functionality that were being highlighted at the conference include estate planning. I was a bit surprised to see this. Now, this tool includes visualization, workflows, what ifs. You can model hypothetical scenarios. You can and it's accessible through the advisor or client portals. I was also surprised just because estate planning is more higher end, more higher net worth than I thought was the core of the Orion client segment. I felt more that their core advisors are more mass affluent, but maybe this is a sign that they're looking to move more upstream, offer more features and functionality to compete in that space. Although partners such as Vanilla, who was at the conference, had a booth, may not be so keen on attending next year if they're running up against competition from Orion in that space. Another application or suite, part of their application suite, they're calling the Compare tool. They describe it as an integrated dashboard that enables viewing the impact of multiple changes to a client's portfolio side by side. One thing I liked about it was one of the demos they gave showed how you could compare different rebalance scenarios with a single click. Now, in other applications that have multiple different rebalance options, you have to run each one separately to see what the outcome is. With the Compare tool from Orion, it shows it all on one screen. So for example, for a complex portfolio, I could show a partial rebalance. I could show a sell-only rebalance. I could show a full rebalance. I could show rebalance halfway to target. And it would show me, for example, what's the capital gains expected, what's the number of trades expected, what's the current risk score of that portfolio, what's the risk score after you run the rebalance of all those different 3 or 4 rebalances. So I thought that was interesting because that's really wasn't available before in any other systems that I've seen. And that seems pretty handy. What else would it show? Risk score. Oh, and the deviation from the model. So whatever model it's attached to, there may be some sort of drift from the model. It will show you the current level of deviation, and then what that would change to for each of those rebalancing options. So pretty cool way to see all this in one click. So I like their Compare tool, a lot of functionality there, and they're looking to integrate that with other parts of the platform, such as advisor trading. So what is advisor trading? It's a simplified version of their Eclipse trading platform. And this is just basically a light trading tool for advisors to use, very simplified. I think that's also something useful because a lot of advisors do still want to get their hands dirty or clean, depending on how you look at it. And they want to be able to access some trading functionality, some very high-level capabilities. Not everything that you would have in Eclipse. And again, Eclipse is a complicated tool. A number of our clients use it. It's very powerful, but it's also complicated. There's a learning curve. You wouldn't want all of your advisors jumping into Eclipse to make changes or to make trades. So having the advisor trading tool is pretty helpful. They have a roadmap. They're talking about bringing in offering household management and trading in this advisor trading tool, bringing in tax management, tax loss harvesting, real-time portfolio monitoring, basically turning it into an advisor as PM tool. So we like that. There's definitely still a need from advisors, even though we don't think it's a good idea, still a very strong demand for advisors for trading tools. Some of the other, that's what roadmap, okay, the roadmap experience advisor training, we talked about that. Another area we didn't talk about was their advisor portal. They're trying to make the advisor portal a single technology hub for both advisors and the home office. It connects from the advisor portal, from what I saw. You can run proposals, IPS. You can look at risks and models, investment management. You can do advisor trading from the portal. You can open up new accounts. You can do some rebalancing. Um, and you can do risk assessment, risk tolerance also from the advisor portal. So they're really building it into a hub, a centralized hub for advisors, which we like. We want to see everything in one place. All right, next up in this list here, okay, advisor trading, 3D risk profile. Now, this is an interesting branding exercise. I never knew there was something called 2D risk, but there was 2D risk, and now there's 3D risk. So Orion considers 2D risk where you're only measuring risk capacity and risk tolerance. And 3D risk includes risk composure, which is basically how the client feels about losing money. So risk capacity is how much money the client can afford to lose, but risk composure is how they feel about losing the money. And what was explained to me was, hey, if maybe you're doing well, you're relatively wealthy, you may have a high risk capacity, but maybe you don't want to lose any money. So your risk capacity is high, but your risk composure is low. So that's how they would break those out. And they've got BFI infused into their risk profiling, and it's available through the advisor portal and such. More statistics. Only 50% of technology at RIAs is integrated, according to Orion's recent wealth survey. And we know that for sure. It's a huge opportunity for Ezra Group and our integration services. So, well, I wasn't surprised to hear that. I think that number might even be a little high on the high side from what we're seeing with the RIAs we work with. There is a serious lack of integration, and the integrations they have, they may say they're integrated, but they really don't do what they need to do, don't provide the data they need to provide, and it's always breaking. So for all-in-one vendors like Orion, they can deliver more fully connected tools and services across the entire advisor value chain and provide better experiences. So we like that. I'm interested to see, going down the road in the roadmap, especially this year, how Orion continues to integrate Eclipse, their advanced trading tool, advisor trading, their lightweight trading tool, their compare tool, their financial planning tool, and their advisor portal. I like to see how all that comes together. Things can be a very smooth advisor experience, be able to support multiple workflows in one place. Here's another stat from their survey. 62% of advisors using behavioral finance techniques added new clients twice as quickly as those who didn't. Not surprising there. If you understand your clients, why they're behaving in certain ways, and you have more empathy because you understand the client's point of view, depending on their particular persona, most likely you will add clients quicker. Now, generative AI also made an appearance, just wrapping up this review of the Ascent conference. Generative AI had to make an appearance, and their president and former CEO of Redtail, Brian McLaughlin, demoed some screens, which I thought were interesting, where they're showing how advisors can generate talking points for use with clients, emails, and other content. And it pulls in data from a BFI questionnaire that the clients take that slots them into one of 10 behavioral finance personas. So whether they are communicative or not communicative, or if they want to save, or they're willing to take risks, those different personas feed into the generative AI, and it changes the output based on that. So this is just 1.0 version, minimum viable product. I think we're going to see these tools really level the empathy gap, is how I call it, where some advisors, as you know, if you've work with as many advisors as we do, some are just more empathetic. And those advisors tend to be more successful. They bond better with clients. They understand their clients' needs intuitively. And other advisors, maybe not so much, but they want to. So these generative AI tools and other AI tools will level that empathy gap by gathering that information and then feeding it to the advisor and giving them tips, recommendations. Hey, you need to call this client and use these keywords when you talk to them. Or this client prefers an email. This client prefers a phone call. This client prefers a letter, whatever it might be, different communication styles. And all that will help make clients feel more connected to their advisors, even if they maybe weren't, it's not the advisor doing it themselves, it's the software doing it, but that's going to level the playing field. So that's really my wrap up. It was a great conference. Thanks again to everyone at Orion, first for inviting me and for hosting such an incredible event. Up next in the news, a new robo-advisor has launched. Their name is Plenty. Fintech platform Plenty launches to modernize wealth building for everyday couples. So this is an interesting story. We don't often hear new robo-advisors, at least not these days. So I'm pretty interested in this company. And bringing on a special guest for this news episode. It is David Rosine, industry consultant extraordinaire. Welcome, Dave.
Thank you.
Thanks for being here. Really appreciate it. You've got a tremendous history in the industry, and we've worked together a long time. So I thought you would have some interesting stuff to talk about. Plenty, especially with your background. But let me just do the quick intro. So Plenty, the first of its kind platform, their goal is to help couples discuss, manage, and invest their money, has announced $2.75 million in pre-seed capital raise from investors including Phenomenal Ventures, Kevin Durant, the basketball star, Rich Kleinman's 335V, the former CEO of Wealthfront, Adam Nash, who we have had on the program recently, and Innovia Capital. So what's interesting about this company, founded by a couple who are now married, that they felt that working couples didn't have a robo-advisor or an online advisor that was designed just for them. What they call it an affordable, fresh, whatever that means, a fresh tech-first approach. They both came from Silicon Valley, which of course shades your eyes a bit, as to how you see the world. But they decided they were going to build this new robo-advisor. I don't know. They don't talk about what the AUM is. It's brand new. I guess they have no AUM, but they seem to have gotten a lot of interesting people behind them, including Adam Nash, CEO of former CEO of Wealthfront. So they've definitely got some traction. What do you think of this, Dave? What's your opinion and of this particular robo here?
Sure. Well, I think we should start out by saying that there are certainly many pundits out there who think the robo phase has waned, and that, quite frankly, as you can see from the top robos, they're pretty legacy. So we have firms like Vanguard and Fidelity and firms that decided to add robos, but already have the ability, either the mind share because people know their names, or the ability to turn clients who might come to them for other reasons. Vanguard and Fidelity certainly get clients just out of that. And then say, by the way,
so thank you for mentioning that. So the top robos, just so we can put things into perspective, Vanguard is still the number one robo by AUM with, as of last October, 228 billion. Then Schwab with 66 billion, Betterment 36, West Wealth Portfolios. I never heard of these guys. 30 billion.
Me neither. So I wonder. I don't trust this list entirely, shall we say.
I'm going to skip that one. So forget I said that. Betterment 36 billion, then Wealthfront 25 billion, Wealthsimple 23, M1.
And I should say, Wealthsimple, I'm sorry, is not it dropped out entirely of their of the US. They basically gave all their US accounts over to, I think it was Betterment, and Wealthfront is Wealthsimple is now Canadian only. So
good point. Yeah. So the market really hasn't grown very much. If you look at these guys as the top 10, there can't be more than 500 billion here total. So
right.
I've seen some crazy numbers that they expect the worldwide robo market to reach 1.8 trillion by this year, which is impossible. It'd have to triple.
And similarly, a number of firms, JP Morgan, as an example, have basically dropped out of the robo market. They just
Yeah.
decided the margins weren't there. So with that in mind, that is, it's a tough market. Three things that I would point out. First of all, they do have a point that there is none of these firms are directly focused on couples.
Mhm.
There are one of two possibilities. They're either focused on individuals, and then specifically they're looking on for the individual's retirement money because, as Willie Sutton said, I rob banks because that's where the money is.
Mhm.
Um, the retirement money, particularly in rollover 401k to IRAs, is often where the money is. Um, so, but the three things that come to mind with this, first, as you've already pointed out, they have some impressive backers, Adam Nash, and as I understand it, also uh, key C-suite, former C-suites from Personal Capital, which, as you mentioned, was
Mhm.
on the top few list. Um, so the fact that they caught the attention of folks who are already deeply in the business is interesting. Item number two, from their ADV, it looks like they'll be charging subscriptions of $10 to $25 per month.
Mhm.
Um, that is pretty much in the sweet spot of subscription-based robos. Recall that basically in robos were 100% AUM based. Um, and the issue there is that they would get tens, perhaps hundreds of thousands of accounts with very, very low amounts in them, $1,000, $2,000, $5,000. And
Mhm.
so, 25%, 25 basis points, excuse me, um, of $1,000 is just not enough to be profitable. So most firms, at least at the smaller ranges, have moved to subscription based.
Mhm.
And 25, frankly, is somewhat at the high end. Uh, 10 to 12 to 15 is typically around. But if they're able to provide something interesting for couples, for example, and I don't know if they do this because we really don't know enough about what their secret sauce might be.
Mhm.
But one of the issues that folks have, that couples will have, is they have different views of, for example, their own risk tolerance or their own goals and objectives and horizon. So, one member of the couple may have a goal that another member doesn't have, or they both look at retirement or saving for college with different levels of importance. So if you can solve that problem, uh, um, give couples a process that enables them to communicate and enables them to see their differences and come to some conclusions about how they should invest,
Mhm.
then that's pretty interesting. Um, and the last point I would make, on the other hand, or is that they really do have a pretty heavy hill to climb. The ability um, uh, to gain clients, new clients are fairly expensive to find. Um, it's not necessarily uh, like they are that they start out with a name like Schwab or Vanguard, so they're going to have to get their name in front of people and get mind share. And whether that's typically uh, 50 to 100 to 500 uh, cost of dollars, cost of client acquisition, um, at several $100s of client acquisition, it would take several years before that $10 a month begins to pay off, that $10 a month subscription. So it's intriguing, it's interesting, it does fill an interesting potential niche, or there's the possibility of it. But whether they will be able to make money in the long run and be able to have clients who make them revenues in the shorter run so that they can stay abreast. That's really what's important.
Yeah, one thing I forgot to mention, David, is you've got a little bit of experience here being the first non-founder employee hire at Ellevest.
Which, by the way, just rang the bell for hitting 2 billion in rang the bell at the New York Stock Exchange for hitting 2 billion in AUM. So great for them. But to put that in perspective, as you know, Betterment is 36 billion plus.
Mhm.
So they have quite a ways to go before they're in the top tier of robo advisors.
Right.
But I will say that Ellevest, along with the Betterments and Wealthfronts of the world, really have not been concentrating on couples.
Mhm.
So this is an area where there is a gap,
Yeah.
but whether the gap can be met profitably is something that we will see.
And Ellevest, just as you mentioned, it just hit 2 billion. How long have they been in business?
Uh, they were a twinkle in the eye in 2014, so that would be 10 years.
It
And it
took
was
them 10 years. Let's say
2015.
they started in 2016, right? They finally got off the
Yes.
ground.
Yeah.
So they've been in
So
business and for 8 years or 7 years,
that's right.
right? They just hit 2 billion. And they've got Sally Krawcheck's name behind them. It still took them that long. So these guys, they're no names. Not that they're not smart, but they don't have the names of Sally Krawcheck to help advertise their product. So it's going to be, as you said, a tough row for them to make enough on $200 a year and 0.2%, 20 basis points to generate a profit. But we'll see. Maybe I don't know what their exit strategy is. We'll find
Right.
out. Great, David. Thanks a lot.
Sure.
Okay, we've got our next story. Equity Advisor Solutions as a new custodial competitor. This story is in wealthmanagement.com by Rob Burgess. Let me check that out for more details. So RIA Custodian Equity Advisor Solutions and ETC Brokerage, both affiliated with the family that founded Equity Trust Company, have combined to create a new custody and clearing platform called Innovate. And it's spelled in an innovative way with a Y instead of an I and an E at the end. Innovate. That seeks to work with entrepreneurial RIAs and broker-dealers. The new entity currently clears through Axos Clearing, but it will go self-clearing eventually. All right, so we work with a lot of custodians. We work, of course, with a lot of RIAs and broker-dealers, and they all need a custodian. Everyone's got at least one, usually more. And custody is a lot like plumbing. You don't even know it's there until something goes wrong. And with custody, we've got the big four, of course. We'll turn to the big three. Also could be the big four. If you had LPL, you got Schwab, Fidelity, Pershing, LPL. I would even throw Raymond James in there, big five. I think the big five firms, those firms hold over 85% of all RIA custody assets, maybe even more. Cerulli didn't include Raymond James in that 85%, so clearly more there. And some 73% of all RIAs manage less than $250 million. When combined, also according to Cerulli, RIAs manage approximately 7 trillion of investable assets in the US, which I also think is a little low. Just looking at all the numbers here, but okay, let's go with 7 trillion. We've seen that RIA custody, as with any custody business, is a scale business. You've got to have assets in order to make money because the rates are so low. You're charging single digits for custody to clients. And that has spurred a wave of M&A back to E-Trade acquiring Trust Company of America, and then they being acquired by Morgan Stanley, then spinning off. Altruist acquired, which started off as a reseller of Apex Custody. Then they built their own custodian platform, and then they acquired Shareholder Services Group. On a sidebar, Altruist last year also raised over 100 million in a Series D round. Because you need money, custodians need money to build out. There's a lot of tech and a lot of balance sheet you need in order to be a custodian. Of course, TD Ameritrade acquired Scottrade way back in the day, and another couple other smaller firms, and then they themselves were gobbled up by Charles Schwab to form the largest RIA custodian, over $3.4 trillion. And of course, a lot of RIAs aren't happy with Schwab because they compete with them with their direct retail offering. But I don't see them leaving. They still custody the assets of Schwab, and they just complain about it. So go figure. Now, of course, Schwab also they want to be very supportive of their independent RIA clients, and they've been developing upmarket resources in areas such as asset management, banking, lending solutions, even private banking and trust services from sources we've heard. And these custodians have a lot of assets, as I mentioned, 7 trillion total. I mentioned a couple numbers there. Fidelity's got 1.5 trillion, Raymond James about the same. That's 3 trillion right there. It's half. And then Fidelity with 3. Then Schwab with 3.4. That's already 6.4 trillion. Then Pershing 350 billion. That's 6.7, 6.8 trillion. LPL's got 200 in fee only. That's already 7 trillion right there. Boom. Market's got to be bigger than 7 trillion. Okay. So Cerulli, do some work. We recalculate that. LPL's got 200 billion of fee-only RIA assets and another 400 billion of hybrid RIA assets and 25,000 advisors. So there you've got some scale and some backing there. Now, word on the street is that there are a lot of former TDA RIAs that aren't really happy with the Schwab trade business model and looking for a new home. And that's attracting a lot of the next level of custodians who aren't the big four, such as Interactive Brokers, Trade PMR, and Trade PMR actually is a reseller of First Clearing's custody. Goldman, which acquired Folio Institutional to get into the RIA business. And those three custodians, I think they've got around 40 billion each in assets. Trade PMR won't say. Goldman, I don't think they say either. Interactive Brokers, I saw a number of 40-something billion. There's also SEI, which is a publicly traded company. I think they've got almost 100 billion in custody assets and about 5,000 clients. Betterment is in the mix. I'm not sure what traction they've even gotten. Of course, we've got old standby reliable Apex Clearing, and as I mentioned before, Axos Advisor Services, which brings us back to Equity Advisor Solutions, that is reselling Axos services. Now, custody, RIA custody, and custody in general is so profitable, even though it's a very low number, like the low basis points per asset. Because of the scale, it's so profitable, and because there's not a lot of work involved, right? You're just holding these assets, that most custodians give away a full tech stack for free. Of course, it just works on their platform, on their custody, with the exception of Pershing, which has their Wove platform, which is coming out soon, that will be multi-custodial. Now, when choosing the right RIA custodian, careful consideration is required of aspects like their technology, what are they giving you, support services, investment options, their NTF platform, cost. Of course, you don't want cost to be the driving factor. A lot of other things are involved in making an informed decision. So with this new custodian, Innovate from Equity Advisor Solutions, Innovate will be led by Catherine Cat Davies, who most recently served as Chief Solutions Officer for Hightower. And the Equity Advisor Solutions and ETC Brokerage are both owned by the Deesh family. And Davies believes custodians should be more accommodating of RIA firms that want to be multi-custodial. Yes, we like that. Now, they believe they've said in the article they're targeting RIAs with between 100 and 800 million in AUM. That's a tough segment. Everybody wants that because it's really a sweet spot with firms. I mean, that's where a lot of our clients come from as well on the consulting side. Usually 500 to 1.5 billion, but it's a sweet spot of advisors because their technology is growing, their assets are growing, and they are often multi-custodial and have a lot of interesting needs. So there's a lot of competition there. I've counted, I think there are at least 13 or 15 RIA custodians, including all the different tiers. Do we need one more? I don't know. But what I always say is in every category, I think there's enough vendors, and there's always seems to be room for one more. So Uh, Go for it. Innovate and Equity Advisor Solutions. Looking forward to your new custody platform. Moving right along, our next story. Apex acquires portfolio rebalancer advisor Arch. All right, this is an interesting story. We always like mergers, acquisitions, and this is no different. So, what is Apex? Apex FinTech Services, formerly Apex Clearing, is a clearing and custody firm. One of a very interesting company that has been around since, I think, 2013, came out of another earlier firm that was reorganized called Penson, that was reorganized into to Apex. And Apex has really built a niche for themselves as the high-tech custodian, the API-driven custodian, the headless custodian, that if you want to build, anyone wanting to build a fintech that offers stock trading in any way, shape, or form needs to go with Apex. And they seem to be able to gather those type of clients very readily. Firms like Robinhood, Stash, SoFi, eToro, all launched on Apex. Now, some of them eventually moved off of Apex, like Robinhood. Altruist started on Apex and then eventually left, built their own custodial platform. And M1 Finance, another popular robo-advisor, was on Apex for a couple of years and just last year moved off to self-clearing. Again, not doesn't say anything bad about Apex. It just says that firms, when they grow to a certain size and they have the scale, they can build it themselves, and they save money that way if they've got that capability. So it does speak well for Apex's APIs and their robust technology infrastructure that allows some of the hottest and techiest startups to go to work with Apex first. But why are they buying Advisor Arch? Who is Advisor Arch? So it's the latest creation of former Robust Wealth founders Michael Cairns and Robert Cavallaro. Man, I just murdered his name. Sorry, Rob. Robert Cavallaro. Cavallaro. Why can't I say this name? Robert Cavallaro. So I've known these guys. I know these guys since they were Robust Wealth for a while. Robust Wealth was an interesting TAMP-like platform with portfolio management, rebalancing, and other tools that was acquired, themselves acquired by Principal Financial a couple years after they launched. Yeah, Robust Wealth acquired by Principal Financial in July 2018. And the rumors were they paid about $40 million for it. So good for Michael Cairns and his team and his investors. Apex has been trying to expand their footprint in the RIA space for a number of years. It's not easy to do. As I said, Apex is a good company, so they've got some very solid technology, but the RIA business is not easy to break into. Now, Apex has over 120 billion in AUM, which makes it one of the larger, smaller custodians. As we mentioned in the earlier article, lots of the smaller tier custodians have around 40 billion. That's big for that tier. So having 120 makes them 3 times as large. So they are relatively successful compared to the big four. They've got 21 million brokerage accounts, 236 million in revenue. Well, that's of 2020, so I can imagine they have more by now, and 220 clients according to their website. Now, earlier in 2021, Apex Clearing agreed to go public via a merger with Northern Star Investment Corp, which was a SPAC. That all fell through in December of 2021. That was that fast. And then recently, they announced a private, is it a private deal? What do they call it? I'm sorry. They announced a private or that they're going to go public. They're going to go IPO. There was something about being private. I have to look at the article again. So now after that SPAC has been in the rearview mirror for a couple of years, oh, here it is. Clearing from Apex FinTech confidentially files for a US IPO. So I'm not sure why it's confidential, but it is. Clearing from Apex is owned by Peak 6 Investments. And they also have been, as I mentioned, building out their RIA infrastructure for a number of years. And they had some starts and stops. You know, it's not, as I mentioned, it's not easy to build this kind of a team. And it's not easy to break into the RIA world. For example, they had with large fanfare hired my friend and who's a very well respected in the industry, Trisha Rothschild, former longtime Morningstar executive and head of all of Morningstar products at one point, was hired as their president at Apex to help push them into the RIA world, as well as Tom Valverde, former Pershing and Fidelity executive, was head of RIA. He left, Trisha eventually left, and they now have Olivia Eisinger, who is GM of advisory at Apex, formerly a TDA executive. So hopefully this team under Olivia will stick and they'll have much success. Now, I'm always interested when vendors launch products that I feel are there's too many of them out there, and I've always said this: no matter how many vendors there are in the space, there's always room for one more. I think I said that in this news podcast a little earlier. And just in portfolio management and rebalancing, there's at least 44 products out there. If you include portfolio management products, you look at the Keatsis Ezra Group map, the March version you can find on Keatsis.com. 25 portfolio management vendors, they've all got trading rebalancing. There's 7 just trading rebalancing vendors, that's 32. And then of the custodial platforms, at least 12 have rebalancers. That's 44 total products with rebalancers. But hey, Mike Cairns decided to build another one, and good for him, got bought out really quickly. So they were there and gone. Very few standalone portfolio rebalancing engines are hanging out for too long before they get acquired. There's a long list of those firms. Back in 2016, TIAA acquired MyVest, which is actually a full-featured wealth management platform, but portfolio management and rebalancing is at the core. Let's see, LPL bought Blaze Portfolio, another standalone rebalancer, in October 2020, and they took them about 10 years before they got bought out. And Adipar, October 2021, 2.5 years ago, acquired Advisor Peak, and Advisor Peak themselves was founded by Damon DeRue, the former founder of Trade Warrior Portfolio Rebalancing Engine. So lots of these guys start up rebalancing engines or portfolio management tools. They get bought out and they build another one. So that seems to be their special sauce. So they keep doing that. So this is news for Apex. I would expect them to be expanding the systems that they've been building. One of their new user interface that they launched at the T3 conference is called Astra, ASTRA. And to me, it looked mainly like a dashboard with some new account opening functionality and not a lot there. But now with Advisor Arch, plugging that in, now you're moving into a full-featured portfolio management platform that Apex can offer to their 220 clients. And it makes them very much like most of the other custodians that we talked about in the previous article. All of them have portfolio management platforms that they want their advisors to use, and they give it away for free because custody is profitable. A couple of minor little notes here. I saw an article as I was researching for this. Apex, their stock rewards API received a new patent approval. Congrats, Apex. That stock awards API enables companies to award their customers stock, like in a rewards program for buying product, whatever they buy, or spending a certain amount of money on a credit card or on a store. They can award their customer stock using the Apex stock rewards API. So that sounds really cool. But you can learn more about Apex at apexfintechsolutions.com. All right, we're on to my favorite part of the news. It's the Advisor Tech Map and Integration Scores section of the news. And for this segment, I brought back my good friend and consultant, David Rosine. Hey, David.
Hi.
All right, so we're going to go through. Now, so David, you are in charge, so just for the audience here, you are in charge at Ezra Group of our integration scoring. And every month we get Michael Keatsis and I meet, and we review the map and all the new vendors and products that want to be added to the map. And then once we decide on what gets on the map, that data then goes into the directory that gets sent over to us at Ezra Group and your team. And then what does your team do with that data? Can you give us like a 5-minute review of that or 2-minute review?
Sure. So, the first thing that we do is we go to the website of the new app, and we review it, and we look for information about their integrations. Often, when they are new integrations, when they are new applications, frankly, they don't have many integrations because they're just trying to get out the door. Um, but in some cases, they'll say, we're a new application and we integrate with these 3 CRMs, or this these financial planning packages, or these bill paying packages, or whatever. Um, if they if on their websites they tell us um, exactly what that level of integration might be. So is it just a single sign-on, or do they take data in real time through APIs? Do they enable data to be passed to them in real time? And in some cases, there are really strong integrations where they are usually in partnership with other applications.
Mhm.
In any event, for every application that they integrate with, we give them a score based upon what we can see on the website. And I should say, if there's if there's a mention of an integration without any details, frankly, we end up giving them the lowest score we can. So our scores range from 1 to 5. Well, there's 0 if they have no integrations with a particular app. But 1 is single sign-on, and 5 is a very, very deep integration. And if all they say is, for example, we integrate with WealthBox without saying anything else, or they just show a WealthBox logo under their integration partners with nothing else, then they're only going to get a 1. But if they tell us more, then we're happy to score them higher. And then the other thing we look at is various on their website, various descriptions they may have of what it would be like for developers to integrate with them. Do they have APIs? Do those APIs enable both the ability to get information from them and post information to them? Are the APIs well documented? And then we also try to score them on a series of other technical features. So, for example, do they have a data dictionary? Do they have penetration tests on a periodic basis? Are they SOC certified or ISO certified, etc.? And we take all of that and we create an integration score, and those integration scores go basically from 0 to 10, and we compare their scores with the other apps in the category. So, for example, we could imagine a specific category, say business valuation that you've just added, which would be used by an advisor to help their clients value their own business.
Mhm.
That might not need to be well integrated with portfolio management systems or bill paying systems or compliance systems or whatever. The category is somewhat standalone. So we take that into consideration and we compare within categories. So, and then as I said, each of the vendors is given a score. The other point is that simultaneous to them being added, that is, that the new vendor being added, Ezra sends out an email requesting of that vendor that they fill out a survey. So everything that I just described is, if we don't get a survey back, we go to their website and do the best we can.
Yep.
But if we do get a survey back, then we use the information that we get from that survey, and therefore the survey information is generally much more accurate than what we find on the websites.
There you go. All right, so that's a great overview. Thanks, David. Um, so let's go through quickly the new applications that are on the March map. So this came out of Michael and our monthly meeting last month. SignX is a new vendor in the e-signature category, and I'm assuming it's pronounced SignX. It's SignX.com. They claim to be the largest provider of true digital signatures in North America, whatever true digital signatures mean. And they also have, they claim to have a flexible API, at least on their website. So that's a good thing for integration scores. And you know, the competition is always a good thing. So DocuSign and other e-signature vendors need some competition. It's good for the industry to have that. So you can check out SignX at signix.com. All right, next up is Cashmere AI. Oh, and by the way, SignX is in, of course, the e-signature category. Cashmere AI, Cashmere like the sweater, AI.com, at least they didn't do cashmere.ai. Cashmereai.com is a prospecting tool, which is now in the prospecting category, under business development, on the Kitsos Ezra Group map. And they believe in putting data and automation behind client acquisitions. They have an intelligent platform, discovers and researches and engages ideal prospects for you. We've seen a flood of these guys. The last couple months have come out with these, what they call AI-based prospecting tools, which is why Michael and I launched the prospecting category, because now we've got 3, 4, 5, 6, 7 applications under prospecting. So I'm not sure how all of these can possibly work. And I'm expecting anybody with any kind of money movement, anybody who sells their business or gets, as anything public that they've gotten some money is going to get flooded with AI-based messages from all these applications. What do you think of that, David?
Well, I am, yes, I am concerned that, AI will become the smarter spammer. Nobody needs smarter spammers. One of the ways we tell that stuff is spam is because of the use of poor grammar or or various phrases. And as AI gets smarter, it's gonna be a little bit harder. I would like to say with regard to Cashmere AI, they're an example where if you go to the website, they do mention integrations, and they mention MailChimp and HubSpot, and SendGrid, but then after that it just says "and more," and there's no link to the more. It's just "and more," and it doesn't say exactly what sort of integrations they provide. All it shows is the logos of those three. So in that case, we would end up rating them just a 1, and we would only rate them a 1 for the 3 that we can see because we don't know what "and more" means.
Yep.
Which is why overall they got a 3.45 score. And some of that score is because of their API, because they do describe their API a little bit more.
So for new vendors, make sure your website describe your APIs and list your integrations and what each integration does, and you'll get a better score. Or else come to our website and fill out the survey for your product. All right, so that's cashmereai.com. Next up is Regverse, which is, let me click on the link here. It's regverse.com. One platform to automate regulatory compliance. So of course, they are in the compliance category, which is also a crowded category. If you look at compliance, 4, 8, 12, 16, 18 vendors, 18 products in the compliance. And that's only standalone. So I mean, vendors like Orion and InvestNet, Tamarack, and others who are in the portfolio management category also have compliance capabilities. Nitrogen Wealth, for example, has compliance capabilities there in sales enablement. So there's way more than 18 options for compliance. But as I keep saying, no matter how many vendors there are in a category, there's always room for one more, it seems, right? We keep getting more vendors. So RegVerse believes they have a simple way to stay up to date. They're going to do it quicker. They're going to save time, and they work with any size firm. So you can check them out at regverse.com.
Yeah, I
Next,
would say, I'm sorry,
okay,
but just going to interrupt.
good.
You can pop this out when you need it. But it looks like the actual product is called Avery. RegVerse is the company, but it's Avery by RegVerse. And then they keep talking about it as Avery.
Oh, thank you. Yes.
So,
Yep, they call it Avery. Correct.
right,
Yep. By RegVerse, which it is even
right.
more confusing, but why not? Keep going, guys. Maybe the product is good and it doesn't matter what the name is. Avery by RegVerse, regverse.com. All right. Wealth Management GPT, standalone AI tool for advisors to create content. It is just as it sounds, Wealth Management, the full two words, GPT.com is their website. And they are going under digital marketing because they're basically right now they have a $20 a month application, which helps advisors write content. I believe that this company was founded by Mark Butler, former
Yes.
COO of Allbridge and former president of Science. So we're excited to see his new venture. We're always interested to see new companies come out using AI tools. Not sure how well they're going to succeed, since a lot of digital marketing vendors are building similar tools into their products. I know, for example, Snappy Kraken has built in generative AI tools into their digital marketing platforms, as well as a couple other vendors have also done something similar. So, but there's no reason why you can't have more. There's always seems to be room. FMG's got some AI tools. Of course, the main vendors like HubSpot and others have some AI as well, but there's always room for one more vendor if you can do it a little bit differently. So that's wealthmanagementgpt.com. Next is a new company in a new category. So there's a new category in this month's Keats's Ezra Group Advisor Tech Map, and that is business valuations, as David mentioned earlier. It's not for advisors to value their business, but it's for advisors to help their clients evaluate their own businesses. And this vendor that is added to the map this month is called Capitalize, spelled just like Capitalize, but without the E. So spell Capitalize and drop the E off the end, .com. The digital platform to unlock and accelerate business value. So they are helping the tool that advisors can use. I guess they can resell it somehow to their clients. They've got some pricing, which they don't give a lot of information about the pricing, but in fact, they give no information about their pricing, but they have a couple different categories: exit planning advisors, business advisors, wealth advisors, that have some different categories of services that they can then offer business valuation to their client. Seems interesting. I certainly might want that kind of functionality or that kind of service from my advisor. It seems like a way to differentiate yourself if they work. The other application, so if you're looking for this on the March map, it's on the far left side under specialized planning, the light blue, baby blue section, financial planning. Towards the bottom, under specialized, it's business valuation, squeezed between healthcare, Medicare, and other. And there's two vendors in there. One's Capitalize, as I mentioned. The other one is Biz Equity, B-I-Z equity.com, which does the same thing. And this is an innovation in our industry, new applications, creating new categories. So we like to see that. All right, that's the fifth application that came out this month. The sixth is EstateView, estateview.info, not .com, .info, estateview.info, innovative and comprehensive estate planning software designed to take estate tax strategies and calculators to a new level. All right, I like that. They think they can do a better job than the existing specialized, sophisticated estate planning software that's out there. So you can check them out at estateview.info. Then we have Sequence. Their website is GetSequence. .io. Back to the IO. .io used to be a cryptocurrency. They love .io. That was the big thing back then. I mean, it's rare to see .io vendors these days. Have you seen any recently, David? .io?
So there are some out there that I mean the simple answer is if they can get a good deal on the domain name. But you're right, it doesn't really mean anything. It used to have something to do with IO, meaning input output.
Hmm.
But I've seen .bizes and .ios that have nothing to do with their the that name.
And what's even
Um,
funnier, people don't even realize that .io is a country. It's a country code, right? So that's the British Indian Ocean Territory. .io. So when you're
yep.
buying a .io domain name, you're paying the British Indian Ocean Territory some money so that you can have a domain in their country domain. That's really what it is. .io. Little known fact. All right.
Yeah,
Well,
the
getting back to
best one
bits.
is the .tv name, which
Right,
is Tuvalu, which is a Polynesian island,
right.
and
They made
people
out like bandits.
exactly.
Tuvalu, yeah. All right, so let's go back to getsequence.io. I was really interested in this product, and because it's a sort of a mind mapping tool that allows clients or advisors to show where your money's moving, show cash flow, um, and it was kind of like a mix of personal capital and Zapier and other mind mapping tools that you could make this cool map and show where the money's coming in from one, link it to an account, your checking account, and then say, well, I want to pay my rent and I want to pay this and pay that, and I want to put this money to my savings account, and you could do all this cool stuff. Um, I couldn't get it to work. I mean, I tried playing with it a bit. It seemed overly complicated. It's a great idea. If you look at the websites, it's kind of cool looking. You can drag and drop these things in sort of this mind mapping way. It just didn't seem it seemed too complicated. I mean, I got a degree in computer science. I mean, it was a long time ago, and we look at applications all day long. I couldn't make it work. Not that this isn't going to work, but it just seemed to be a little too complicated. But again, I'm
I have
always
a
looking
quick
for
question
innovative
for
stuff.
you on that.
Yeah, go ahead.
Um, well, because I know you put it in the cash management area
Yes.
category, but am I correct that the others in that category actually um, I would say manage your cash,
Yeah,
whereas this is sort of
Michael and I were going back and forth. We didn't know where to put this.
yeah, I
Um,
don't know either.
we were
But
thinking of putting
exactly
it
right.
into advice engagement,
Mm,
because it was kind of it's or workflow, because it's kind of a
mm,
workflow tool.
yeah,
And it's
it,
really
it's
specific to cash flow.
right. I mean, it struck me as more like Asset Map. I mean, not
Yeah.
exactly at all like Asset Map. What Asset Map does for your overall holdings and assets, it just
Yeah.
does for your cash.
Mhm.
But all it does, it seems, is show you pictures. It's not really doing something with
Yeah,
it.
I mean that's just where we put it. It just seemed because it was cash related, it was best to go there. It was a toss up between workflow support and cash management won out. I think because of their website is so cash flow oriented that we put it under cash management, even though it doesn't do
Yeah,
the other applications under cash management actually manage your cash to get
exactly. Like
higher
Flourish
returns.
or,
Yes, exactly.
exactly. So,
Well, that is so the map isn't perfect. Right. So unfortunately, we can't have a category that's perfect for everything. That's the
right.
best we
Or
can.
everything goes in its own category, which becomes useless.
Yeah,
So,
and that was and one thing we agreed upon, Michael and I, was that we wouldn't have a category without at least three applications, which I think we already broke that rule. I know there's one category with only two. I can't remember which one it is, but we tried to say three is the minimum to create a new category.
yeah, I think business valuation now only has two right now, the two you just
Oh,
added.
you're right. Business valuation
So,
has only two. There you go. So you broke the
yep.
rule already. And AI assistant. AI assistant
Oh,
is under client engagement, only has two. But
got it. Yeah.
the rule was supposed to be three. We're always breaking. All right. All right. So that's sequence. getsequence.io. Last but not least, Luminary, and their website is withluminary.com. They are estate services. And I think they've been trying to get onto the map for a long time, but we didn't let them on because they didn't have a product. They were just
Well, that's a good reason.
well, wait, that sounds a little sillier than it really is. They were a service. They offered estate planning as a service, as rather than a product, a software product. So we didn't let them on the map because this isn't a services map. So firms like Trust and Will are not on the map because they are an estate planning service. They will build estate plans for you. They have software, but they don't make money selling the software. They make money on the service. Luminary was the same, but they just came out with a software product that you can buy and use just the software product without their estate planning services, which is why they are now on the map, because this map is a software map. It's designed to be that way. I believe Michael at some point is going to make a services map as well. So now Luminary has software, which you can buy, and it's on the map now under estate planning. And you can check them out at withluminary.com. And all these applications have a score or not. They could have a 0 score, as David said, but you can check that out at ezragroup.com under what we do, integration scores. Right. That's a wrap for everything here, David. Thanks for being here. Appreciate it, man.
My pleasure. Take care.
All right. That's it. You've reached the end of another episode of the WealthTech Today podcast. Please go to our website, ezragroup.com. Scroll to the bottom of the homepage. Smash that button to subscribe to our newsletter. Once a month, you'll receive an email chock full of wealth management goodness, news, updates, information. You won't be disappointed. So thanks for listening, and talk to you all again next time.